These things aren't working. Rod, you doing okay? It's good to see you. Everybody hear me okay? Chicky, chicky, 1, 2, chicky, chicky, chicky. I think that's right. All right, welcome in. Awesome. Mitch, MRP, Ed, Matt, Jim, Rod, Armando, Dwayne, Drew. Welcome in. Sorry I'm a little bit late. That gym membership is getting in my nerves. I'm doing an hour cardio a day though. Y'all be proud of me. I'm putting in the time, you know. All right, what's the market doing today? Because I hadn't looked at anything. I've been listening to Tasty Trade just a little bit, just kind of hear what's going on, but I really wasn't paying attention. So let's see what's going on. Chart. All right. We don't care about no NQ anymore. Stick with NQ. All right. So the E-minis are up. Let's see what all we got here. Wow. Kind of auto. All right, so up almost 1%. Wow, how about that? So let's see if we can see it. Where's all our stuff? The AD is 207, much higher than yesterday. We had a little weak AD yesterday, but it didn't matter. If you see your charts doing that, a lot of times you'll have to change your timing on it and think or swim. For some reason, I probably should have started it all over, but I just didn't. I just let it go. So let's see where all our stuff is. There we go. There we go, Bob. All right, so where's our opening range at? Where's that garbage at? Opening range. There's overnight high. Here we go. Here's our 15-minute range. So we're above that. We're above the overnight high. We're above VWAP, above the 15-minute range. We're above the cash open. So everything is looking really, really, really kind of bullish. Except we may come down and meet our VWAP here. So, okay, up 0.92%. Always kind of look at volume to see what volume's doing, you know, and it chills out normally during lunchtime chop. No big deal there. All right, let's go to our big green monster. Of course, we get our big macro view of what this thing is doing. So let's go there on the E-minis. And what do we got? Well, we got fair value here. We got overbought, oversold, fair value. We are in the upper fair value line. We always keep an eye on our point of control on volume. Never surprised that volume is really happy trading here. Traders were real comfortable doing lots of trades at this area. So we are above all of that. So will we come back down to there? We don't know, but we're in a fairly balanced section right now. What's our little bitty screwdriver doing today? Screwdriver. I'm your screwdriver. Let's see what you're looking at. If we're in the right expiration, 418, 424. Is that right? Doesn't look right. Come on, baby. What's going on? Where's my 30-day options? Probably what it is I needed to close everything out. And I apologize. I just didn't have time to do that before I came back in. Anyone got a screwdriver reading, Matt? What's screwdriver read? Where'd Matt go? Matt, you just can't come in and just leave. Who's got a screwdriver reading? Somebody got it? I can plug it into my thing. Okay, we'll get it later. But it was 87 the last couple of days. We expect that to normalize. By doing so, that would mean that the market will continue to go up. Now, remember, Bobby Genius called a bear market right here. This is where Bobby Genius called the bear market. Remember that? This is SPY. And since that time, we've had 1, 2, 3, 4, 5, 6 updates. So interestingly enough, now our SPY is back above that 200 simple daily moving average. So it's kind of interesting if you follow those moving averages type things. You know, it's really important to a lot of traders if we get above that and can close above that, and particularly if it will be above the 200 daily moving average at the end of the month. So we've only got what, 9 more days in the end of this month. But I still believe, I really believe that we're in an extended bear market. And you can look at the linear regression. You can look at the 50 now, it's gone below the 200 moving average. So I think that's there, but what do I know? Again, Bobby Genius caused the bear here, and we've been nothing but bullish. And if you were watching Tasty Trade today, it was kind of interesting because they were saying that, now again, I was on the, okay, MRP says skews at 83. Let me put that in. Thanks, MRP. I appreciate that. That the move that we've had the last couple of days, like being over a percentage up for 3 or 4 days in a row, doesn't happen that often at all. I thought it was kind of neat little research that they did. I wish I could quote it, but again, I was sweating on a bicycle, so I have no idea. So again, here we go. We've got our skew. It's finally starting to come down a little bit. Things appear to be getting back to some sense of normalcy. We would continue to think that the market will go sideways to up based on this to get us back between that 25 and 35 that we have not seen since September or October. Very interesting. All right. I also wanted to share with you yesterday, we were playing with the back testing, right? We're playing with back testing. Bring this over here so I can pull all these things. And I did several back tests yesterday on our 111 trade. Now, we can tear this apart a million ways. So let's not try to do that. But what we tried to do is figure out what's the optimal management for the 111 trade. What's the optimal management? And the only way that I could do it, well, it's not the only way that I could do it, but what I could do is I could also do, manage the 8 delta by itself and then manage this by itself over the last 10 years and see how it works. But what I did is just looked at it as being one trade. How would you best optimize the one trade? A couple things that we need to talk about though. How do you want the 111 to operate in your portfolio? Are you using this for an income trade? Are you using it for a hedge? Or are you using it for both? So how you use the 111 may be some determination of how you're going to manage the trade. So today, we will look at it as just one trade. If you want to use it as a hedge, then what you would do is you would wait until this naked component is at 50% gain, right? You want 50% profit on that so that you can take this risk off and have a free put debit spread. So that is if you're using it as a hedge, right? So if you're using it as an income trade, how would you do that? Well, that's probably more appropriate for what I did the back test on is looking at the entire trade over the last 10 years and trading it daily, no stop loss. We tried stop losses yesterday. We tried exiting at 21, 14, and 7 days to expiration. And what I found, let me just show you a little bit of this. I found that I was able to pretty much optimize it. Now, I didn't go like 61%, 62, 63, 60. I did 60% management profit, 65, 70, 75, 80, 85, 90, 95. I did 40, 30, 20. I did the whole gamut, running basically every 10. If you manage this thing at 20%, 30% profit, 40%, how did we maximize it? And the maximization came treating it all as one trade and managing it at 65% profit. Bobby, that's wrong though, because Tasty Trade says, hey, listen, I got you. That's on short puts and strangles and all that kind of stuff. So this is kind of a different trade, right? That's why it was interesting to see this particular back test, and I thought you'd like to see it. And y'all want to play with it? Play with it, because eDelta Pro now gave me 30 days free, and they're giving each one of you who has ever had a account with them 30 days free because they're touting and showcasing and beta testing their new brokerage service. So it's kind of cool, right? And I did use this for my dissertation as well. Use this as one of the tools for back testing stuff. So it's kind of cool. So what we did is we used SPY because unfortunately we can't use the futures here. So we had to use SPY, closest thing that we could do. And we tried to replicate the 111 by using a 28 long delta put, a 25 short delta put, and an 8 delta short put, the naked component there, right? And remember, I like doing these at 60 days to expiration, closest to 60. Now, if you want to do that differently and you want to do 45 days, I'd love to see what your back test comes out to. Maybe it's more profitable. Maybe it's not as risky. Maybe it's whatever. So that's one thing that you can do. So there's all kind of ways that you can test this thing. So if y'all want to this, let's see, share, save, and copy URL. Well, let me just let y'all do that. So we'll go 111 back test, and hopefully you guys can open it up even if you don't have an account. So let's save that. Then let's save that. Now I wanted to show you the results. If you answer your phone, that's getting on my nerves. So high heavens. All right, so I saved a couple of these. So let me open a couple of these. Here we go. So let's look at the 50% in comparison to the, so 50% got us on a $100,000 account, got us an $80,000 profit. We made $32 per and a 79% return on capital, gave us a 67% drawdown, and we could see that that clearly happened. The drawdown on the 111 happened during the Corona crash. It was 67%. So this is managing it at 50%. Okay, so let's move it up. Let's go to 60%. 60% was a little better, huh? It got us $88,000, $35 per trade instead of 32, and it will increase our return on capital. We did have a max drawdown though that was a little bit higher. Instead of the 67, it was 72%. Then we optimized it at 65%. So here was the 65. So instead of 88,000 and what was it, $35 per trade, 65%, okay, of max profits, Wayne, right? So, if you how Tasty Trade normally will say, if you sell something for $100, you're going to maximize your profits by taking it 50%, so a 50% profit. So we maximize this at a 65% profit. So 65% was theoretically where we needed to close it. And again, when you back test, you're subject to all kind of biases. We're subject to the biases of the bull market, which is recency bias. There's all kind of biases that we violate in doing back tests such as this, but it's the best thing that we have, right? I mean, to say, well, if I'm trying to look for a way to, there's a max below the debit spread and a max above. Which do you use? Okay, max below the debit spread and a max above. Which do you use? Okay, on this one, it's a good question. I'm not sure exactly what you're saying, Dwayne. There's a max below the debit spread and a max above. What do you? I just put it into this particular trade and said manage at 65% of the entire trade. And I'll show you how I set it up. All right, so this gave you a 93% return on capital. It gave you a slightly lower max drawdown. The other one, 60 was 77%, right? So we started with a capital of $100,000 account, and you see the 75% drawdown was here. Now, so what we would hope is that we would have some hedges in place that would help in the event that we had another Corona crash, but those things happen. I mean, clearly those things happen. Now look at this. This was kind of interesting, right? We had trades, 2,496 trades, 13 were losers, which I thought was really, really, really kind of Cool. But now the 13 losers, look at the profits of that. The average loser was $1,646. The average winner was $46. If you put all that together, the average P&L was 37%. So then I started moving out and saying, well, what if we moved up to 70% management? How would that look? So let me show you 70% management. And 70% management started going down, right? So 92,954. So our overall expectation or realized return started going down. And what I did notice is it said if you were going to do that type of management, your required capital to start your campaign, instead of being $100,000, would be $122,000. And it had a max drawdown of a couple percent higher, right? So, there's all kinds of things. So let's just see if it shows it now. And if I can share this with you so y'all can open it up, play with it, or at least see the results. Unbelievable. This thing is slow today. But we'll come back and look at that in a little bit. But I thought it was kind of neat, right? So that you could at least have some baseline for managing the trade. Now, I tried 7 days to expiration with the 65%, 14 days to expiration, 21 cutting it off, closing the trade, and it did not improve the results. So it basically said, you're better off holding them to expiration and just letting the trade go, or taking it as 65% profitability for the overall trade. And that's really easy to see on the platform, isn't it? So when you go to the platform, you go to your monitor tab, and day equity call, unbelievable. So I transferred some money out of the account, and I get this day equity call because I've been flagged as a pattern day trader. The only problem is I'm trading futures, and they're trying to say, hey, you don't need to be trading SPY or any of those things, because you get into the pattern day trader thing by taking my money out. So I got that little deal, but it's no big deal because we're trading futures, and futures are not subject to the pattern day trading rules. So I'm ignoring that. All right, so what we'll do is put these into our groups and show you a couple things here. So here's the 112 call, right? Which is down, 98%. So again, I tried maximizing by saying, hey, we're going to close things at 100%, 200%, 300% losses. It did not improve the results any. But again, if that's your technique to close something when it's a 2x loser, then you feel comfortable with that, do that. It didn't improve the results overall. So here's one, right? So 1124 is up 68%. Bingo. So what you would do is say, well, technically, if I want to maximize that, I'm up 250 today on it. We're up $65 on the whole trade, which is 68%. You could close that one and reestablish that trade. So take it off for a winner. Let's look at some more and see how many more we've got that fit that. So here's one that's up 6%. That's the one we put on yesterday, I think. Here's 112 first, up 86%, right? So you could right click on that one, take that one off. 11166, $93, boom. And again, the regular 111 trade, I've not had a single one that's been a loser. Is that a surprise to us? Not at all. I wish that would hurry. Why is it not hurry? Let me go back. Why is that not a surprise? Because in 10 years, you got to think about that. In 10 years, we had 13 losers. Is that amazing? I mean, that's 99% of these trades are profitable. Keep in mind, if you do have a loser, I mean, it could be, somewhat significant in comparison to these. But my God, y'all, have you and I ever done anything, even on 5 delta strangles or 5 delta short puts, naked puts, that have ever been 99%? No. Karen sold 5 delta puts, right, that theoretically would have had a 95% win rate. So it's very, very interesting to see that we had 99% of our trades profitable, and that we did so well with this. Now, keep in mind, this is why, I mean, you never know when you need a hedge, right? You never know that you need a hedge. Now, we've got a built-in hedge with our trade, and you can mix it up too, right? You could say, hey, on some of these, I'm going to take them off at 50% so that I've got a free hedge on and let the hedge go to expiration. You could do that. So there's all different kind of ways that you can um, maneuver this or manage this. And it's kind of like what Sosnoff was saying today while I was on the bicycle. I remember him saying, it's bots over bots. It's bots over bots, people over robotics, people over algos, that you got to make that decision for your account. So on something like this, I could say, man, this short naked put has made 73%. It has more than paid for the debit for this. So if your assumption is that we're in a bearish market and you want to take the $77 profit and leave you on a free put debit spread, all kind of things that you can do with this trade. That's why it's so cool and very neat. And I'm glad we're doing a little bit of testing on it. Here's another one, up 84%. Here's another one, up 84%. Here's one, 65%. Here's one down 45%. Of course, Bobby, is experimenting a little bit by putting some on the call side. And then this raging bull move that we've had over the last few days, those are down a little bit. Now, what I like about that is even though it's down 43%, it's only down 32.50. No big deal. 112 fifth, this one's up 40%. All right. So you would let that one work a little bit. Here's the 112 bear that I put on. Again, this is experimental. This is something I'm just testing out, see how it's doing. And apparently it's not doing very well because the market's been overwhelmingly bullish. And I put in a bear 112. 1126 up 33. And then the one that was shared to us by Matt and Ken, we put that one in. And very, very, very good, right? Because that one's up $125, up 13%. Why did I do that one rather than just doing my 111 day in and day out? Well, I did it because I wanted to increase my theta. Now, let's show you something that you probably have seen in the past. So I kind of opened up the old, spreadsheet, right? We hadn't seen this one in a long time. Those of you that were with me in the beginning of, what year was it? 2021, the end of 2020, will remember this sheet. And so I've kind of tweaked it, took out a bunch of the stuff that I didn't need and what we're not trading right now. And I kept a copy so we can always add it back if we wanted to. But what we did is I put in something that we can actually manage our trades with, right? And kind of keep up with them. So I was going to go back and put all the trades in that I've done since January. And I was like, oh my gosh, it was just hard. And then I was thinking, I don't remember how I closed them, how I did anything. So I didn't do too good. But I fixed this up, y'all, where it will tell you, you can put your trades in and everything. If y'all want a copy of this, I'll save a copy for you in our resources tab if you kind of want to run the 111s. And I even put the bear 112, the bull 112. We'll go over those later. Again, I'm just I'm experimenting on those experiments. I don't want you to necessarily do those, but I think we're really, really comfortable with the 111. Okay, so Laura says you're new to the 111 trade. What's the mechanics or any guys? Well, this is a really, really cool trade. So let's try to put one on, Laura, so you can see it, see the little puppy in action. And again, we've not had a single loser. We started doing this, I think I was looking at some of my DTEs on, I think it was like 70 or 80 days ago. Does that sound about right to everybody? So it's been really, really, really good. So let's go and let's put, so let's put on one. See if we can do one. Got plenty of buying power to do it. And here, I think this is what you'll like. Now, remember, old dummy Bobby is putting some on the call side. That looks like a dumb idea right now, all right? It looks like stupid. So, who knows? And that's when I thought, man, we're in the bear market. It's going to help put some on here. And apparently, I don't know what I'm talking about. So I'm just going to put them on regularly today. All right, I'll show you the regular 111. Now, can you do on SPY? You can, but you're going to use up a lot of buying power. So let's try one on SPY. Okay. So if you got a large account, you certainly can. Let's try to do one. So what you would do here is I go out close to 60 days and we'll put a long put vertical. And on SPY, you would do one that's going to be 5 points wide. All right. That's how we normally set them up. Do it 5 point wide on the SPY. And then we're going to go down to where you can buy that for $1. So let's look at that. Let's buy it at $1. $1.44, $1.21, $1. All right, so there's your spread. So that's not a bad deal, right? It's $100 buying power effect for that. Now here's where the problem comes in. So now you've got to sell a naked component to pay for that dollar. And we normally say we look for something that'll pay for it times 2. So if you're paying $1 for that one, we want to collect $2 here. Right? So if we collect $2 there, you got to sell that one. So now it shows a buying power reduction of $3,851 just on one of these. So now, if you want to do the 112, what we were doing is saying, hey, let's make this even safer. So take this out to where you can sell that for $1 and theoretically get below that 2 standard deviation line. So you'd have to have a 2 standard deviation move before this was in jeopardy, and then increase the number of contracts on that short leg from 1 to 2. All right, so you do a 112. All right, and I mean, buying power efficiency is 6903. The problem is in Tastyworks, you can't send that as a single trade. Right? Right. This accounting is calling strict closing orders. Unbelievable. So here's what you do then on this one. On this one, you would go, that's why I like the micros better. So you put them in the micros, go out to 59 days. And what's the difference in buying power? So in the micros, we do a long put vertical, and you do these 50 points wide. So 50 points wide, 44.80, 10, 20, 30, 40, 50. And we move that down to where you could do it for $10. Right? So we normally would go down to where it's about 975. Be careful if you've got existing positions. These things get stacked on top of each other. You would never, I would never sell one where I had one long, right? So I'd sell one where I had one short, but what's this? When I hit the strikes to go down, that gets stuck. So you gotta left click it and move it down. So 975 up to $10. That's where I would do that one out. So we'll work that order, hopefully get filled for $10. Come on, baby. What's wrong with you? We'll bump it up a quarter. And we're filled. All right. So then, still in that 59-day expiration, we spent 10 and a quarter on that puppy. 10 and a quarter. Quarter more than I wanted to do. 10 and a quarter. So we want to get twice that. We'd like to bring in $20.50 on the sale of a put. Okay. $20.50 on the sale of a put. So we could go and sell this one, the 37.50, right, with a 9% probability of being in the money, the 8 delta. Or we could make that much safer by going and finding one that was like $10.25 here and selling 2 of them. That would be a 5% probability money. Now, what I like about the 112 is I get a little bit greedy. So instead of doing the, since I'm well below 2 standard deviation move here, I like going out and collecting a little more than 10.25. So maybe we go and collect 11, or we collect 11.50, or we collect 12, right? If we're still at a 6 delta, or 6 or 4, probability of being in the money. So why don't we go and do this 12? It just sounds like a nice Terry Bradshaw, Pittsburgh Steelers type numbers. And don't forget, it's a 469 debit for one of them. So we create our quantity to 2. It says 939 debit for that one. Much better than doing it in SPY. And here's the thing, Laura, is if you're trading the futures, which I love trading, you get 1256 tax treatment, right? So you get long-term capital gains rate of 60% of your stuff, and the other 40 is taxed as ordinary income. So that's why we really, really like the futures. You don't get that in SPY. So let's sell 2 of those. Get filled on that. Bingo. And there's our trade. Questions on that? Let's see. What's the gold buying power? I don't have a gold buying power. Now, for the entire portfolio, right, you can, could you sell 3? Oh, heck yeah. Yeah, you could do 3, right? You could sell, and then you do a 113 and go way further out. Now, keep in mind, you're increasing your commissions. You're increasing your buying power requirements by doing that, but you certainly could. Make that even safer. I mean, you could do a 114 or 115, or however you want to. You're just going to increase your commissions, and you will increase your buying power. So let's say we wanted to do a 113. So what do we say? We'd have to do 3 of these, right? So it looks like the bid ask may get a little bit wider as we get way down here, way down to the 3240. So if you want to sell 3 of these, what does it say our buying power is going to be? What's this? It's going to be 1,085. So your buying power requirements go up a little bit. And of course, you're going to have a little bit. Let's see, how much our total commission on that? Commission's $4.50, so $6.06. So you start getting, into a little bit more there. All right, so profit on the trade. Yeah, so then let's see. So then, what do you want to do now to manage it? Well, we found out that it looks like over the last 10 years, not saying that that's going to be the same thing going forward, but it looks like a good target would be to take the entire trade off at 65%. If you are doing other income trades and you got other things going on and you're just wanting this for a downside hedge, what would you do? You would close the naked put component, the 2 that we just did today. You would close that when that component was at a 50% profit. Why? Because that gives you a put debit spread that is absolutely, positively no risk, right? And it's a hedge to the downside. But what I like is we've got a nice little hedge to the downside. Looks like here with our overall 111s that we've got on. Just going to scroll out, see what the beast looks like. What does the beast look like? Beast looks kind of cool, right? Where at expiration, this is Theo zone, expiration zone, that we got a nice profit hump down here. And at expiration, if this thing comes up here, it looks like we're up, almost $5,000 to the downside. Really, really cool. Any questions? How long do these last? It's not, I wouldn't say it's genius, Laura. Well, if it is genius, who came up with this, by the way? Wasn't me. Remember, I don't come up with anything. I'm the dumb one. I just look at other things that people have done and go, hey, that's pretty cool. That's a pretty cool trade. How long do these usually last? I mean, I was taking them all the way to expiration until I got to a situation where I was about to have to roll the naked component out for a loss. Fortunately, the market rebounded and I never had to make that decision. So, hold on a second. I can tell you how many days in the trade that is. Hold on a second. Our average days in the trade. Come on, little cookie cutter. Hold on a second. Let's do this again. Let's look. Let me do this. If it saved it, it should let me open it back up. Let's see. Because that little thingamajig should tell us. Oh, man. Let's do it again. See if we can find it here. Symbol. We have to use symbol spy because it won't let us do that. Oh, I could. Days to expiration was 60. We're going to do a daily trade. Right? That's how we did that. And we said max profit was at 65. Do not reestablish. Wait until expiration. Let me pull up my thing here. Let's play with it. Because the good thing is I can tell you how many days in the trade. It may have it here. Hey, look at this. Average trade duration was 18 days. 18 days. Isn't that cool? Yeah, and the trade is put on for an overall credit. Keep in mind, if you're doing Tasty Works, you got to do it as two different trades. You got to put the put debit spread on first, then the naked component on second. But you're in the trade, if you're going to close it at 65% profit, an average of 18 days. Cool, right? Yeah, and in Thinkorswim, you can do it as one trade. Just do it in one trade and then put it in a group so that you can keep them all separated and, close them when it gets 65% profit, just like you're going to maximize that based on what has happened in the last. And I know someone's going to post on YouTube, hey, genius, just because it worked in the past doesn't mean it'll work in the future. I got you. It's just, there is an art to this. We try to take the art out of trading. We can't take it out all the time. Look at your Greeks, manage your Greeks, make sure your theta's there, make sure your deltas are what your assumption is in the market, and control your Vega. How you do that? Well, you do the 1-1-1 probably right now with something like Black Swan Hedge, or you do it with the fixed call hedge that you can't put on now. You got to hold off on the fixed call hedge. I don't think it's prudent to do that. So you do a little hedging with this, or you run this all by itself. If you can, withstand a 75% max drawdown, or if it looks like you're having a big drawdown, maybe you do change your thing to, hey, I'm gonna take it off if it's a 200% loser. Overall, it didn't help your results though. That's the thing that I found. Overall, it may have helped you on one or two, but overall it didn't help you much. I mean, it's an incredible win rate when you get 99% profitable trades and you can average $46 on your winners. You lose $16.46 on your losers, but you only had 13 losers. That ain't bad. Could you backtest the Rick trade? Absolutely. I think you can. So let's try it. I mean, we'll try the Rick trade. Let's see how we can do this. I like that y'all are thinking, though. That's what I want you to do. I don't want you to ever go, I'm going to trade just like Bobby. If you trade just like Bobby, you'll be the worst trader in the world, right? So do your thing, baby. Do your thing. So here, let's see if we can do the Rick trade here. How would we do it? Negative 15% dollars from the thing. So deltas. So Rick is doing he's selling around a 5 delta. Now he told us he changes it up based on blah, 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 blah. So we'll do 10 years back. We're at SPX. So now we got a buy put, don't we? I said we got a put spread. Here we go. Put spread. So we got to do a -5 right? Now, where would be the, let's see if we can figure it out. Let's type in SPX and kind of see if we can figure out what the delta of a 20 point below it would. Now, and that might change too, right? The deltas may change. This is all we got to go on right now, though. So let's go in and let's do, let's see, today is Tuesday. So we'll be looking at a Friday one. And see, it'd be better to do it on the, I guess, on the day that we're going to do it. But so here's SPX for Friday. And he's selling one that has a 5% probability of money. So let's say he's doing the 43.50. And he's doing a 20 point wide spread. So 40 wide spread is a 3% probability of being in the money. So you got a 5% probability of being in the money and a 3% probability of being in the money. So let's try that. So let's make this there. That's about all I can do to get that. Now you could do the percent out of the money, blah, blah, blah. But to me, probably delta's easy. It's 5 and 3. We're doing a put spread. Trade frequency. Now, I think sequential trade when the prior expires, there's a close. I think they had a thing that you could do like a Monday, Wednesday, Friday. Yes. Open trades on selected days. Here we go. So we're going to do daily, right? Open trades only on selected days. Monday, we're not going to open them on Tuesday. We're going to open them on Wednesday. We're going to open them on Friday, right? Trade daily on Monday, Wednesday, and Friday. If y'all see something I need to change on that, please let me know. All right, now, then you got to put in, and here's what I wish it had, right? MRP, I wish it had capability, kind of like portfolio optimizer that we use to optimize the back test of this. But as far as I know, we don't have that. So what would we do? Well, let's say maximum profit, exit at this, stop loss at this. So what if we just did this and didn't do anything, right? We just said, hey, let's just run it. See if this thing will let us run it just like, do it frequency, now we don't want to do 60 DTE. We want to do, what do we say? 3 DTE, or should we put 2 there? So that's a question. 3 or 2? We'll try 3. 3 DTE, 2 DTE. Hopefully it's going to get it right closest to 3 DTE. So 3 DTE, doing the 5 to 3. Y'all see anything else I need to change? Let's see if this will let us run that. Aha, we're running. Let's see how this works out. Now, similar back tests have already been done on this type of trade, right? With SprintWig, and in the resources tab, we've got that information that we can see their back test of selling the naked put. But Rick does it a little bit different. He does a put spread. He does it 20 points wide. So let's see what this looks like. Be interesting to see how it did over the last 10 years. And also, to make sure that we've set the parameters up right, it's got a trade log, right? So you could actually go back and look at the individual dates and everything to make sure that this thing turned out just fine. How's everybody doing? Y'all doing good? Oh man, I grilled some pork chops on the grill last night. Shut up, for the love. Sorry, that's my name. He heard me say pork chops, and I think he got all crazy. But they sure were good. Oh, by the way, if you want the best barbecue sauce on the planet, Williamson Brothers barbecue sauce. It's a little place in, they got several places in Georgia, and it's in my local Kroger that you can get their barbecue sauce. Oh my gosh, is it delicious? All right, so how do we do on the Rick trade? Again, we did the Rick trade on, well, this is an SPX in it. How do we do? So going to expiration, looks like we made $20,000, $14 a trade, 458, 133% return on capital. And this is kind of cool. The required capital on this one, since we're not holding these trades and putting them on one after the other, was only $15,000, which was kind of cool. Maximum drawdown of 6.52%. And again, this would be something that I would have to go through and look at and see, you know, did I put the parameters in? I had to go into the trade log. I had to do a little investigating. But if you want to play with this thing, contact eDelta Pro. They may let you get in on this current beta, even if you weren't a prior customer. But look at this. It's kind of cool. We had, what, 1,491 trades. And I'm trying to think, does that sound right? Over 10 years. 1448 were profitable, 43 losers, right? So we had a 97% probability of success. Cool thing about that is that lines up with what the probabilities are in the trade. We would anticipate that about 95% of these would be profitable. Again, volatility is overstated in life as in trading, right? So rather than the 95% probability of success, we actually turned out to be 97% profitable. And it is interesting, right? How much does Rick sell these for? He sells them for 25 cents, 30, 35 cents, 40 cents, which would kind of, you know, his average trade, taking it to expiration, he was making $37. Now, what you then do is say, okay, well, what if, you know, we do a 50%, take it off at 50%. We use now Sprintwig said that did not, do not reestablish, wait till expiration. Yeah, I think that's what we do. So Sprintwig found out that did not work out as well. Let's see if it does. 20. Let's see what we did here. See if that changes anything. But the Williamson Brothers barbecue sauce on top of the pork chops, unbelievable. And I highly suggest getting a meat thermometer, an instant read thermometer for your grill, especially if you're going to smoke things too. Get one with like a 500-foot radius on it, where you can go watch March Madness in your house, anywhere in your house, and you got the grill, the smoker outside, you got the thermometer out there. Oh man, you ain't got to worry about it. And you just pick up your little thing and it says, hey, the temperature is this. And you go, oh man. So you know when your pork chop gets to 160, 165 was chicken, 145, I think, then you know that the pork chop's done. Isn't that cool? Come on, baby, run. Or I'll talk about barbecue all day. And then Beth told me that the Williamson Brothers barbecue closest to us in Douglasville, Georgia, is closing. And I'm like, crap, no, that's not good. So they already closed because they sold their place. But then she told me that they're opening up another. Good. Beth, you got to keep me straight. So did it help by doing 50% profit? Oh, no. Oh, no at all, did it? All right. Kept the percent profitable at exactly the same, but instead of you making $37 per trade, you ended up making $32 trade. So you did worse. Isn't that cool? Isn't that cool? So look at us back testing. I'm not the best back tester in the world. And do I put too much emphasis on it? No. All I know is this. Let's our takeaway for the day. Let's say what our takeaway of the day. The hot trade right now is the 111 or the 112. Now I've tried different variations that are not working out too good. Right now, the variation that Matt and them gave me is working out just fine. But as far as me putting them on the call side and doing little fancy stuff like that, that's not working too good. Now, next week, if the market may work just fine, but right now it's not working. So a lot of times we try to be too fancy or too, to add all this little stuff to it. It doesn't work. Just keep it simple. Do the 111, do the 112. Do it in the micros, do it in the E-minis. You can calendarize them. You can diagonalize them. You can do whatever you want to do. It's a very simple trade. It's a put debit spread financed by naked put. That's it. All right, great session today. Look at us back testing. I will see y'all tomorrow.